So I found this question online that I think is brilliant. It's totally worth making a video about. The question is, why are rich people always borrowing money? I want to explain to you why rich people go into debt and borrow money. And to do that, you got to understand, first of all, that there's an opportunity cost to everything in life. Like, what am I foregoing with the choices that I'm making? So for example, why would a rich person borrow money? I want to give you an example right now. I'm doing this real estate deal right now. It's a commercial deal. This commercial deal needs about $1 million to get off the ground. And then it's going to make me about $1 million every single year. Like, would you do that deal? Totally, you would do that deal. If I showed you the numbers on this deal, you would do this deal. This is a deal that I need $1 million and then I'll get it. So I can either put in $1 million or I can borrow $1 million. Well, if I borrow that $1 million and let's say it's at 10% interest, then that $1 million is going to cost me $100,000 a year. But guess what? Even though that costs $100,000 a year, what am I making a year? $1 million. So guess what? I don't have to put up $1 million, but I get $1 million, and the cost of it, it's $100,000. So check it out. Why are rich people always borrowing money? It's because the question is, it comes down to a magic word called arbitrage. Now, don't tune out. I want you to tune in. This is really important. Arbitrage is the delta or the difference between what you're earning and what the money costs. So for example, in the example I just gave you, if that money costs me 10%, but I'm making 100%, the difference is 90%. So why would I put out $1 million when I can borrow it so cheap and make the difference of $900,000? So at the end of the day, when do you just pay something off or when do you borrow money? Well, it all comes down to that arbitrage shows up in the form of what's called a cash flow. So for example, here's another way of looking at it. Let's say I want to buy a real estate deal and it requires me to put a small amount of money down, but I'm going to borrow this big loan against it. And that big loan is going to cost me $1,000 a month. I just went into debt. I borrowed money. It's costing me $1,000. Some of you are like, dude, why would you ever do that? Who wants an extra $1,000 of debt? That seems crazy, right? Guess what I'm going to do with that house? I'm going to rent it out to a nice friendly couple that are going to pay $1,500 a month. And every month they're giving me $1,500. And every month I have a liability of $1,000, $1,500 in, $1,000 out. What's the difference? Well, the difference is $500. I've done so many deals where the cash flow is $500 a month. And I want to ask you, what could you do with an extra $500 a month? Would that cover minimum payment on a credit card bill? Could that get you out of debt faster? Could it cover your car payment? Could it a million different things? Could it send you to Disneyland? Could it buy you lunch for the next 2 months? Dude, $500 a month for a lot of us, for average, normal financial people, that's a really big deal. So in real estate, I created my wealth because I borrowed money. I didn't have the money to buy a house, but the bank was willing to loan on it. So I used the bank's money. The bank gives me money at 3%, 5%, 6%. Dude, that's cheap. So if you can find the right business or the right real estate or the right whatever, where you can get a higher amount, the arbitrage there ends up being a cash flow of $500 a month. I pay $1,000, I receive $1,500. Now, I get it. You're watching, you're thinking, but Kris, there are risks. Like, what if the house goes unrented? Well, you're right. I'm going to have a $1,000 payment and oops, no money came in. Or Kris, what if this? Kris, what if that? You got to write down all those what ifs and you need a business plan. For example, when I do a house, I do a lease option. It's a very special type of seller financing deal where I'll put a family in a home and that family actually, they want to eventually buy the house. So they're going to give me $5,000 upfront, non-refundable. And then they're going to give me $1,500 a month and I pay the bank $1,000 a month. Well, I got $5,000 sitting in the bank. So now I'm $5,000 ahead. That's a buffer. That gives me a margin of safety. Dude, why do rich people borrow money? Dude, I was poor and I borrowed money and it got me ahead. Now that I have more money, do I just want to buy everything cash? No. Why? Because it actually costs me more money. As long as people are willing to give me money for less and I can invest that money and make more, then I'm going to invest with their money. They're always going to require I put up collateral or some amount of money, but I'm usually going to borrow as much of theirs as possible for the same reason that rich people do. Why? Because I want to make money with other people's money. If I showed you a deal worth $100,000 and you can borrow the money from the bank and create $500 a month of cash flow, would you do the deal? Dude, I like you. You should subscribe to the channel, check out some of the other videos, and for sure come visit me on my website where I can fast track what it takes for you to get that money, put it to work, and make the difference.